2021. This event is organized by Fintech Convergence Council and the Payment Council of India of the Internet and Mobile Association of India. It gives me immense pleasure to introduce you to this panel discussion on the topic Growth Drivers of Future, the Fintech Hubs. Joining me here in this discussion is Ms. Pallavi Gupta from Startup India Hub in West India, Mr. Ali Hassan, Senior Representative Europe and North America, DIFC Authority, and Ms. Shan, Industry Consultant, FinTechSpace. I would also like to announce you that owing to bad health, Mr. Gencho Kerezov would not be joining us today. And also, Astha Grover has been replaced by Ms. Pallavi Gupta. So just this is for your quick info. Without wasting much time, let me call upon Pallavi to take the stage and carry this discussion. Over to you, Pallavi. Thank you.
Thank you so much, and a very warm welcome to all of you. 2020 has been a challenging year globally as the world, underwent lockdowns with the onset of the pandemic. The fintech sector has seen an upward trajectory during this period, and COVID has been a black swan event that has accelerated the adoption of fintech. But at the same time, it has also highlighted vulnerabilities that are there in the existing ecosystem. Ms. Low and Mr. Hassan, as the vaccination program is gaining momentum worldwide, how has fintech evolved during this period, especially as the public is now starting to adapt to the new normal? And secondly, what are your views on how we can further support the entire ecosystem to mitigate the existing vulnerabilities in the ecosystem?
Shall I get started?
Yeah, sure, Shan, you go first.
Okay. First of all, I think I just have a quick intro about myself. I'm from FinTechSpace. FinTechSpace is the fintech hub in Taiwan, and it's a public and private partnership. And I'm the industry consultant for FinTechSpace. Is also because I have run that and funded that since 2017. 2018. And now I have moved on. I just moved on last month and become the head of digital finance division of the largest commercial bank in Taiwan, CTBC. And that's why I think to answer this question, that it's a new normal is more about because everyone has been forced to work from home. So a lot of contactless payment and also a lot of onboarding of the financial service that will be highly needed and have also become a must-have for Taiwan. So it came out some issues or challenges, we say. So first of all, it will be how to make the payment. Before the payment, how can I do the good KYC, or how can I do the verification and identification of who you are. So that is quite a big challenge at the beginning for the Taiwan digital finance. And followed by then when you have this payment, and we have to check whether this payment is genuine or is a theft. And also when we have go through all the digital journey, we have also to make sure it's all compliance. So this kind of all digital and compliance issue become quite a hustle and the challenges for Taiwan financial sector for both public and private. So what we do is that we separate that into different issues. First will be the onboarding. So the KYC, eKYC become quite important issue, and we launched RateTech Challenge last year. And RateTech Challenge that is also look for more challenging and also the solution that can resolve that. So one of the key of the three topics is the eKYC. So we are looking for the more two-factor authentication solution from the startup and from the cybersecurity. So we are looking for those kind of more high-tech solution to resolve that. And the other one is more about the data sharing. So when we are working with the financial sector, working with the vertical, the e-commerce or the payment, third-party players. So how to make sure that this data sharing is safe, and how to make sure that our data and financial data in other hands are also in good hands. So this data sharing governance that our government just create, we call co-creation platform, and build up the public and private dialogue communication platform, so that everyone can start to address their issues from different angle, and also come to conclusion, or even come to a common interest that we can just reach some consensus. So I think that's how we get started. We found the challenges, but we're trying to have a more innovative approach, get together everyone, and then we are still looking for the answer, but it's not there yet. I think it will be a long journey, and now we are still in the middle.
Very good, Shan.
Yes, Mr. Hassan.
Yes, I will chip in now. So I'm delighted to be part of this panel today, and thanks everyone for joining the session. Just by way of background, Dubai International Financial Centre, who I represent, is a Dubai government initiative established in 2004 as part of Dubai's long-term economic strategy to build on its standing as a global commercial hub at the heart of trade flows between Asia, Middle East, Africa and Europe. I've actually been involved with the Centre for 16 of its 17 years, previously as a financial regulator, and then the last 8 years helping firms export their products, solutions and expertise into the MIASA markets, which is Middle East, Africa, South Asia. So listen, I mean, it's a really interesting question to start off with. Obviously, the world has experienced a lot of disruption over the last 18 months or so. But I think that, whenever you have that scale of disruption and however it happens, it usually results in an acceleration of trends that are already underway. And I think that, we've certainly seen that in the fintech space. In fact, the number of fintech companies based in the DIFC has pretty much doubled in the last 18 months. And I think that, the pandemic has really underscored the value and the need to adopt digital business solutions and products and customer engagement through that. And I think companies are also adapting their operating models. Everyone that I've spoken to recently, nobody is going back to a 5-day working week in the office. I think that there's a realization that may not be the most efficient model for a company. There is a shift away from thinking that I need to be co-located with my colleagues. And that's being replaced with I need to be co-located with the markets that I am serving and the clients that I am serving. So, we're definitely getting a sense of that. There's also a sense of, I can do a lot of what I do in terms of work from anywhere, and certainly, Dubai, with its offering has popped up on people's agendas as they've thought, let's be based, where I am supported and I am comfortable. Plus the fact that you had with the travel restrictions, the fly in, fly out model from say traditional centers in Europe or North America became extremely restricted, and that kind of reinforced that feedback loop that we should be perhaps more embedded in those growth markets, that we're looking to engage. So, I think that's been interesting. I think also it's been, obviously challenging globally. I think, Dubai and the UAE as a whole, moved to quickly address the vulnerabilities in society, right? So it was one of the fastest vaccine rollouts, one of the most comprehensive vaccine rollouts, and now business is pretty much open again. Dubai Expo is being launched today, As I said, we've seen a real uptick in interest in the centre. So the DIFC, as I said, was established in 2004, and it's firmly established as the number one centre in the Middle East. It's the largest financial services, professional services, and innovation cluster. It's a $1 trillion centre in terms of assets booked, raised, and managed. 700 regulated firms, over 400 tech companies from around the world, including very much India and other parts of Asia. And there are sort of three components that have supported that growth, which are relevant to supporting, fintech business models as well, of course. So one is we've tried to provide business certainty and fungibility, if you like, of business models and control environments. So how have we done that? Well, we have adopted a common law legal system within the centre. So we're a jurisdiction within a jurisdiction. And we've combined that with international standards of regulation. Our regulator, the DFSA, operates to international standards, has MOUs with SEBI, with the Reserve Bank, and 100 plus other regulators from around the world. So that really allows you to take a business model and a control framework that's perhaps been established elsewhere and neatly slot it in to the local, market. The laws that we have. So we have a common law legal environment, and then we have a set of laws, the IFC laws, which are closely aligned to those of England and Wales and other common law jurisdictions. But it means that we can also adapt the legal environment and our regulations to take into account innovation and new business models arising. And we'll sort of touch upon that again in a moment. The second point is it's great having a centre. It's great having laws and regs. What you need is the prospect for revenue. What you need is the market opportunity. I think that, we certainly have that in Miaza, right? If you look at Miaza as a whole, you have diversifying economies in the GCC, rapidly moving away from hydrocarbon dependency and looking to deploy capital across a number of sectors. You also have obviously growth economies in India and elsewhere in close proximity. You also have a very high level of digital infrastructure, right? If you look at the smartphone penetration in the GCC, it's 20% higher than Europe. Smartphone penetration in India and Africa is growing at 35%. So that's one of the metrics that Google looks at when they're looking at new markets. And that infrastructure is in place, which supports B2B, B2C, solutions. So, I think that is critical, that there is a real market opportunity. We think competition is relatively benign if you look against, Europe or North America, but the demand is high. Legacy systems are comparatively fewer. So uptake and interest is that much higher. Of course, our innovation hub, which we'll talk about again later, is embedded within that wider community of firms, and they of themselves represent, low-hanging fruit, for tech companies that are coming to set up in the DIFC. So I think that, that market opportunity is there and is very supportive. Lastly, access to talent and capital, right? So, Dubai has worked very hard to put in the hard and soft infrastructure to provide the lifestyle expected by international talent. Even within the DIFC itself, within our 110 acres, we have 140 plus nationalities. And, people on the tech side are not only looking at us as a, front office location, as a sales and marketing operation, but also increasingly as a developer hub. So I've been speaking to unicorns and other entities from different jurisdictions that are now saying that actually, we'd like to develop this capability in Dubai. And then finally, and certainly importantly, on the capital side, Obviously, the Middle East, the GCC, is awash with liquidity. There is $7 trillion in investable assets, public, sovereign, and government, but actually more increasingly and more interestingly, private capital within the region, which is actually comparable quantum to the government sovereign wealth funds, is being transformed, is being utilized in different ways. And you're seeing that capital flowing into financial markets, into the private markets, and they're very interested in new technologies. So, you're having that private capital being put to work from the region. And you also have VCs, right? So regional VCs, but international VCs, some of which are now ending up in Dubai because their portfolio companies have seen the market opportunity. So with the tech companies, you're also seeing the VCs, and I'll stop there.
I completely agree. Fintech with the onset of pandemic has actually seen a boost, and this is also evident in India, wherein a lot of the funding that has come, especially in 2021, has actually gone to the fintech startups. So definitely, there's a key investor interest in this space, and facilitating that are actually fintech hubs. So, coming to my next question, fintech hubs are very instrumental to an evolving landscape for financial technology, and it helps businesses grab various growth opportunities. And many fintech hubs are now emerging. So, my question to Mr. Hassan will be: how are the rising fintech hubs, for example, India, existing fintech hubs, how are they challenging the predominant ones that have been there since a long time? And what changes have these new fintech hubs urged in?
Thanks, Pallavi. Yeah, I mean, it's just picking up some of the points I've just made. I think fintech hubs represent a focal point. They benefit from a clustering effect, a networking effect, so that if you get like-minded innovators and entrepreneurs together, that kind of sparks things and accelerates innovation, and also identifies where other participants and players should look to if they're looking for particular solutions. So certainly we've seen that in Dubai. I'm sure you're seeing that in India and elsewhere. And I think these markets, these hubs, excuse me, because of the market opportunity in the geography, they will just grow. I think that they will grow and complement established hubs in Europe and North America. It's closer to the needs and solutions that tech companies are looking to solve in those regions. There are some specific needs. I think we've got a question on financial inclusion later on, so we can look at that in a little bit more detail. But I think that there is a place for all. I think the pie only grows, it doesn't shrink. And I think one of the important things that we've tried to do is to ensure that we collaborate across different fintech hubs. And so for example, the other day I was on a call with the center in South Korea, and we're talking about how we can collaborate to facilitate innovation in both our markets, to lower barriers to entry, so that you encourage two-way flow of talent, of solutions, and indeed capital. So I think I think fintech hubs are important. They provide that clustering effect, and also can connect those the wider economies in a meaningful way to bring about innovation efficiently.
I completely agree with that. And before I move on to my next question, I would like the audience to know that we are now posting a poll question for them on the fintech hubs. So coming to this, of course, hubs have been a key to development, and they also require a deeper look at the policy and regulations that are there in place. So, Mr. Hassan, again, what are some of the key regulatory and policy changes that have helped transform the landscape for fintech startups in particular?
Yes, so there's sort of three areas that I'd like to highlight. One is government strategy, and again, looking at the UAE and Dubai, because that's that's our home. I mean, what we've seen in the UAE and Dubai in terms of government strategy is a significant and public pivot towards the adoption of a digital economy. So, for example, Dubai has committed to becoming a smart city, looking at adopting digital government services, clean environmental solutions, smart mobility, and innovation across the economic sectors, right? So logistics, manufacturing, aviation, hospitality, tourism, as well as financial services, right? So to facilitate that, and this is sort of builds on the idea of a hub effect, Dubai has created the Dubai Future District, of which DIFC, Dubai International Financial Centre, is part of. And that is the aim of that district is to nurture and support the needed innovation and to match the innovation providers with private enterprise and government departments that have needs to be solved. Secondly, in terms of the business environment, DIFC as a location, as a financial center, pivoted towards innovation around four years ago, with the launch of the region's first accelerator program, Fintech Hive. And each year we've actually seen, several hundred applications from around the globe, with around 20 or so being accepted on the program each year. And the program provides a structured engagement with 40 plus partner firms and the wider DIFC community, all of which are potential investors, clients, mentors. So trying to really up that the touch points that tech companies have. And indeed, we've seen investors in the region respond. So over $300 million has been raised by DIFC-based innovation companies from investors in the region. And we do participate in that capital raise ourselves. We have a DIFC FinTech fund, which has made investments. That is now being rolled into a wider Dubai Innovation Fund of around $300 million. So we do try to support and participate in that way as well. So in 2021, we've taken things to the next level. We've actually widened from the accelerator program, actually based on demand. We have now created, again, a cluster within a cluster, if you like, the Innovation Hub, which is now home to, as I mentioned, 400 tech companies. 60% of GCC FinTech is based in DIFC. It's 6 times larger than any other cluster in the region. And the Innovation Hub is part of our future of finance strategy. So we've put a strategy together. We've publicized that. It is about supporting and attracting the respective FinTech verticals, whether it's digital banking, wealth tech, insurtech, and indeed the enable ecosystems, software as a solution, VC players, and those enabling technologies, right, that make it all happen. So, cyber, AI, blockchain, we want all the players to come together that compose the digital stack. The other way we've supported is that we've actually provided a very sort of incentivized establishment schemes, an incentivized license that basically gives a route to market that's low cost, low friction, and with that sort of easy engagement with the wider DIFC community. So in effect, we actually co-brand with every tech company because, the DIFC brand gives credibility, illustrates commitment to the region. And everything we do, I mean, the success of all our firms is our success. Everything we do for tech companies is to try to bring day one revenue closer and then to grow it. And then finally, in terms of laws and regulation, as I said, we have our own set of laws, and we continue to develop those to cater for new innovation-driven businesses. So, for example, we have put in place, state-of-the-art intellectual property law to protect proprietary innovations. We have a data privacy law in line with GDPR and other standards to provide comfort to end users and indeed certainty to businesses. We put in place a comprehensive payments regime that allows payment services throughout the digital stack to be offered. And recently we put in place a VC regime that is tailored to the particular characteristics of venture capital managers. We're also shifting into the crypto space. So our regulator, the DFSA, has just finalized regulations for security tokens, and for cryptocurrencies, we believe that that will be issued towards the end of the year. We're very much of the view that regulation is an enabler that provides certainty and transparency for market practitioners and consumers. And I would encourage all regulators to really look at how they can provide that certainty and that transparency, which will indeed accelerate digital adoptions and initiatives.
Again, I completely agree with the fact that regulations are definitely enablers and provide the transparency that is going to help the economy. Sticking to policy framework is essential to support the startup ecosystem in any economy, and startups have time and again proven that they can be the torch bearers of innovative technology when it comes to disrupting the existing methods. And this we have seen in fintech as well. So, Ms. Low, how are startups in the Indian fintech revolution driving the entire space, and how are they leveraging innovative technologies to drive growth in this particular sector?
Yeah, first of all, I really want to say I really appreciate what DIFC have done, and it's been well thought through. So from this wide range, and I think for fintech community, they really need this kind of a total solution. So from regulatory to investment. Okay, back to startups driving the Indian fintech revolution. I think speaking of the Indian, I don't know so much, but what I learned from our some investors' opinion, I think payment is quite important, especially for the financial inclusion. So that would be the part I think for different culture and also the different environment, the innovation would be really culture based. So what I can share is more about in Taiwan. So what we do here, I think it's just like Mr. Hassan said. I think regulator is really the key driver and also this accelerator. So especially in Taiwan, our regulation framework is positive listed. So the thing that have been written in the law or the regulation you can do. Otherwise, that you have to get the approval. So sorry, actually, you couldn't in the most of the times. That's why we adopt the regulatory sandbox in 2018 as well. It's quite an important approach and the tool for those innovation has to be in Taiwan to emerge. So our FAC, the regulator in Taiwan, they also have tried to adopt this kind of encouragement. So there's 3 out of 9 regulatory sandbox cases. They are from the fintech companies, and those 3 are also from the fintech space. There's one just being exit. what they do is most of them are targeting also the financial inclusion market, and they target the micro investors. So they want to make this financial market and the financial products can be easier to access or easier to exchange. So for these, the first one is we call fund swap. Fund swap, you can swap. They build up the community, so everyone can buy and sell their fund without really get back to the original fund company. Normally, it would take more T plus 7 to 10 days, but then we adopt this fund swap because it becomes commercialized now and getting to the market after they exit the regulatory sandbox the end of June. So now we can just have T plus one, and you can get your money back, and you can, and the other, your counterpart can get their fund. They can get their what they want in also in one day. So in the past, it's very difficult. And the other case is we call joint vest. They leverage this kind of a collective buying power to buy the bond and the debt. And we found that is a very similar case also happened in Singapore regulatory sandbox called bonds exchange. And what they do is that they try to lower the bar that this like a young investors, they can invest in very high value financial products like bond and debt. So they what they call is you can just spend $10 and you can buy Apple or you can buy Tesla debt. So I think that's quite compelling to those young investors because they don't need to put too much money, and they maybe because in the bond market, I think it's more it's about at least 100,000 USD. Then you can buy one ticket size. So for Taiwanese, it's quite difficult. So they try to leverage this kind of a collective power, and that's become quite welcome to the markets and also the young investors. So that's another way we think that in this kind of wealth management market, in the past, it's quite difficult to have this kind of tailor-made or the self-managed platform that you can choose your own financial products. And now we kind of open up. But in this situation, just like Mr. Hassan said, we have to have this kind of, we have to keep that still secure, safe and sound. So when we encourage this kind of fintech company, before they really been issued the license, the financial license, we normally in this sandbox, they have to go with a bank. So the bank were to be in charge with the KYC and AML, this kind of compliance cost. So that leave this kind of a market conduct to the banks, and the bank can be the compliance taker. But as for the business model, those fintech companies still need to prove this business model works, and it has to show it will be workable and also to trustable, just to make everyone think this kind of business model is that can be just not for one company but for the whole industry. So then they will adjust the regulation later. So that's how we go through this kind of fintech revolution in financial sector here. So, but on the other hand, that we also find that there's the growth in the fintech sector. The other parts is not the B2C, because this kind of B2C is always very hard. The other part will be the B2B. So the B2B, like previously we mentioned that because there's a new normal, so the digital sound infra is become more important. So the cybersecurity and the AI to have this kind of we are more encouraging about the joint defense toward the cyber attack or the fraud. So that's why we have this kind we call the RegTech challenge, and this part is more trying to leverage the high tech savvy or the high tech solution provider, not just the financial background, but we encourage the technology background, so they come into the financial innovation sector. And that's why we try to leverage them with our we call digital sandbox. We try to build up the interface for these technology companies they are familiar with for a long time, so they can do this kind of experiment in the closed system. So the risk will be well taken care of. And they only need to try whether the flow is safe and there's any risk within any flow and the activities. So that's why we also encourage those because Taiwan we have a lot of high tech talents. So we're trying to engage these high tech communities to be part of or to take part in our financial innovation in digital. So that's why we have B2C and they can try to leverage the regulatory sandbox, but we have put more effort to encourage this kind of B2B solution to enhance this digital financial sector to be stronger.
I completely agree with you, as you said in the start, that digital payments as a sector in India has been booming since quite some time now. And regulatory and digital sandboxes are both important, wherein finance and technology can collaborate and bring about the best innovation, improvement, and scalability. Other than sectoral growth, startups have also played an active role in making finance accessible to a wider audience. Mr. Hassan, how are fintech startups playing a key role in increasing financial inclusion and literacy worldwide?
Yeah, I mean, a great question, very relevant, and certainly we're seeing a lot of initiatives that are looking to address financial inclusion in particular. Obviously, Dubai, where it's located, we actually have close proximity to opportunities at both ends of the wealth spectrum. So significant pools of wealth, but also significant populations that are unbanked and or have limited access to financial products such as insurance. And I do think, and we see this in our accelerator cohorts in the innovation companies that are coming to Dubai, the potential is there to provide new low-cost solutions, in banking, in insurance, in wealth management and payments that reduce costs, improve access, remove reliance on intermediaries and the associated costs that they have to bear. And as I said, one of the most important channels is that sort of mobile distribution channel. It's very prevalent in these sort of typically, challenged countries and regions, where there are significant individuals without access to finance, and really, those mobile channels do provide that potential to increase. You also have a wider policy piece, right? So, the ESG principles that are being applied across financial markets, driven by the UN, but becoming increasingly important for financial institutions, globally. You kind of see financial inclusion being very much part of that, right? So you would imagine that there's private capital, public capital that is looking to solution providers in this space. And I think that, for example, in insurance, these new models that are coming up, pay-as-you-go type of insurance products, or, looking to address specific risks, they could actually absolutely transform lives in huge swathes of the world. where a crop failure or some other issue can, lead to real deprivation. But if there was access to, to a relevant and well-priced insurance product, those protections would be in place, and you wouldn't have, you wouldn't see those types of issues arising. So I think I think tech is definitely driving, forward in this space. And I think that, over the sort of next sort of year or two, you're really going to see, a significant traction.
Completely agree. Startups have furthered this cause and they have added value globally, especially when it comes to including the unbanked population. I'll take a pause here and post another poll question for the audience on automated financial advice systems. Okay, coming back to the value addition that is given by fintech startups, we are also witnessing increasing collaborations between fintechs and banking institutes, and it is crucial for both to go hand in hand to create a powerful impact in today's world. So, Ms. Lowe, what is the key to successful cooperation between startups and large banking institutions? And what may be some of the key challenges that come when you're working with large public banks and credit institutions?
Thank you. I think that's a very good question, actually, because in Taiwan, every fintech have to co-op with all these financial institutions, just like I mentioned previously, because it's a positive listed. So every financial service has to be granted. So especially from the regulator. So it's we haven't have this very different type of license from the proportionary. So for us, I think it's quite important to see whether and how these fintech can success with the financial institution together. It's not just it's not competition. It has to be very collaboration. But however, it's it's very human things, because since you are the financial institution, it's very difficult for them to help because it's a very commercial market. So most of the time, we spoke to the fintech companies. Then we think there's an initiative of the open banking as a very good encouragement from the regulator. Somehow, because in Taiwan, open banking, this initiative is more follow Singapore and Hong Kong style. So it's more from the industry side to drive the case. It's not mandatory. So there's no compulsory cooperation, or the compulsory is not for the compliance that the banks doesn't need to be so bothered to work with the fintech companies. So what we do, we encourage this kind of large bank like CTBC as well. So once they are thinking of their API strategy and how to leverage the external partners can help with your API strategy to go through or to expand the market. So that is one way. So we also, on the other hand, we also encourage the fintech company to come out the win-win business model. So it's not like you can get the API just with the consensus from the regulator. No, you have to get the consensus with the financial institutions as well, especially their business side. Their BU had to see the traffic and had to see the transaction and whether your user is who they are target as well. So it can be very challenging on the other hand also, because we have account aggregator startup who have got the first have got past the first phase of the open banking. So the first phase of open banking is about the open financial data. So it's like the location, the bank's information, this kind of very public open data. But even though we have a fintech company have got the over 20 banks cooperate with them. So we see that as a good start because it's just the open data, but it's a sign still. So this company called Moneybook. Moneybook is like the account aggregator, the largest account aggregator in Taiwan. So they have been highly valued by the most financial institution because one of the things is because they are quite responsible. They are the responsible innovator. So they follow the ISO 27001 and for the security, the cybersecurity governance, and they also have compliance with all this TSP guideline. So they kind of have built a trust with the financial institution. So this we see the good start as the trustworthy company. But for the second step, it's more the account information for the account opening and aggregation, all the details of the transaction. We found it become a big challenge because once take out this kind of sensitive data from the financial institution, it's not only to be safe or to be trusted, but also has to have the interest in that. And that's why they have to either they can retarget the marketing, the audience, and they can get their sales value up, or they can build up the new business model. So this kind of a master account would be quite important and also quite the key because for Taiwan financial institutions cannot be the TSP, cannot be the third party service provider. That's why they have the position that they can have a very not the permission, but they have the value proposition they can build to the their partners, the financial institutions. However, we found that still this kind of win-win business model become a very difficult challenge for the fintech companies as well, and also this kind of competition between financial institutions will also kind of backfire to the fintech company as well. So that would be the challenge. Now we think they have to have been more. We have to have more regulation to work around and to encourage and the support and the kind of new initiative would be quite welcome for the fintech companies to really do the best practice here. And of course, everyone thinks that the second phase would be only in the middle, but everyone is still waiting for if they can do the transaction on their website or in their app. So we think, but without the second phase success, it's quite it's still very uncertain about the next phase. So we believe that open banking or open finance will be the way, but we are still figuring out from the public and private.
Understood, and completely agreed. The active participation at both ends is required, as well as regulatory and new initiative inputs to actually mitigate these issues and build a thriving sector. We're also seeing various big tech companies like Facebook, Google also enter into the realm of digital payments. Mr. Hassan, how is this expected to impact the small local players?
Yeah, I mean, great question. Listen, I mean, Dubai sits slap bang in the middle of a significant remittance corridor, right? So I think the GCC accounts for around 25% of global remittance flows. Given the demographics and the international trade that flows through the region, particularly through Dubai. So, we've seen, so that demand is there, and we've seen that added to with the rise of e-commerce growing at around 28% CAGR over the last 5 years in the GCC. And of course, the digital payments is an essential element of that solution. So the DIFC, as I mentioned, we put in place a payments regime last year in April, and we've seen significant interest actually from all players, right? So global payments unicorns, big tech, regional and international startups, and all of these have different strengths and weaknesses, and we believe that there is room for all these types of players, which will encourage further innovation. Startups in particular, very relevant to incumbent institutions such as banks, who maybe don't necessarily have the in-house expertise and infrastructure, and they can effectively, acquire the solution from a startup. Another route is to provide your solution more widely as a startup through perhaps white labeling, where you provide your solution across multiple market participants. And indeed, our regulatory sandbox, we have one of those as well. We've seen a number of regional startup payment firms, come forward into the space, which illustrates that there is, very good competition at the moment. I do think, going back to regulation, actually, I do think that some of the big tech players have entered markets without too much, regulatory oversight. And I think as regulations become more established in jurisdictions, you're going to get a little bit of leveling of the playing field. So I think that there is room for all, and I think big tech will be, more regulated in the future.
I think we all look forward to that leveling of the play field over here. I'll take a pause here and post another poll question on what has been the most significant contributor of transformation for finance for the audience. Coming back to our discussion, the digital payments area has been one of the most significant contributors of growth in the fintech space and has been attracting a majority of competition and investments from across the world. Ms. Lu, what are some of the other major subsectors that are harbinging the growth in fintech sector?
Yeah, I would say, due to the time, I think I will go quickly. It's just I think in Taiwan, just first of all, wealth management for the niche markets, yeah, for the young investors and or small investors, and the other is the robo advisor. The robo advisor, because one of the reasons is not because of the market, but because of our talent. In Taiwan, we have a lot of financial engineering courses and programs, so we have quite good quality, quite a big community of the engineer in financial, and so I think that also produce a lot of good robo advisory solutions. So they are also looking for the international markets if once the Dubai needs, just in case. And the other part is the account aggregator, just I mentioned, because everyone sees that this kind of a aggregation service is very user centric. So they believe everyone would, because we are also an over banking place. We have 38 banks in Taiwan. So, and we don't, we unlike the other this kind of regional neighbors, we don't have this kind of a big four occupy 90% of financial market, but our big four can only occupy 20%. So you can see there's a big long tail in Taiwan. So account aggregator is quite welcome. One of the reasons is also because everyone holds more than 4 credit cards and 5 banking cards. So for us, this kind of aggregation service has become very popular in the market, but it haven't been very prevail in the market yet. So we think it's one of the emerging ones. And the fourth one would be the rate take. Just we mentioned that the digital compliance, they can both resolve the regulator and also the financial institutions. So their problems and their challenges that we found that all the same is about the new digital normal, then how we can deal with that and make the financial services digitally and compliant. So I think that would be the major subsector that we are focusing.
It will be exciting to see how other areas are also affecting the fintech sector, boost its growth. And with the rising digital practices, actually, there are also risks that are that must be accounted for, and especially when it comes to dealing with finance. So, what would be your opinion, Ms. Lu, on how major challenges like cyber attacks and identity thefts hindering the growth of this entire space?
Oh, sorry, the signal wasn't clear. Can you,
Yes, so
Pallavi? Yeah.
I was seeing that along with the digital practices, there are also a lot of risks that are associated, especially when it comes to dealing with finances. So, in your opinion, how major challenges like cyber attacks and identity thefts hindering the growth of the fintech sector?
I think for in Taiwan, we found that a lot of fraud and also identity theft and also the data leaking, and that would be um, that have come up more and more and more frequent here, and especially to those kind of phishing issues and phishing fraud, especially target to those older generation. So we think that this kind of fraud and new cyber attack scenarios can just come out so quickly and so differently. So for us, we think it's quite for one is you have to keep that safe and sound because all the financial service has to be continuously and safe and sound operated. But on the other hand, that will also have a really safe and sound infrastructure that can provide to the mass market and to the majority. And so this is the big challenge for the whole industry. So at one on the one side, I have to keep everything normal and stable. But on the other hand, I have to change all this system. We have to change a lot of a core system, and that we can afford the next generation of the cybersecurity. So it's a kind of you have to more investment in the security issue. But on the other hand, you also need to make sure that you have more revenue that you can generate from the digital world. So both sides need to be put into more investment. But then, and that is a big digital transformation. But this transformation, not to transform one side, but you have to take care two different key challenges. So which means you may be put $2 in, but you only have $1 back. So this kind of new digital transformation also relate to the long-term investment, digital investment. So you have to have the regulatory encouragement, and also you have to have the mindset from the decision makers from the financial institutions. So I think that has to come hand to hand.
I completely agree and would also like to hear Mr. Hassan's thoughts on this.
Yeah, I mean, it's I do think that these are issues that need to be worked through. There are actually tech companies operating in the cybersecurity space. We've seen some come and establish in Dubai and DIFC. So solutions are being implemented, are being developed. There are some challenges around identity theft and data storage and such like. But I don't see any of it being unresolvable. So, I'm confident that, we'll get to where we need to get to.
Completely agree with better digital practices, regulations, and cybersecurity laws. This will definitely become a much better. All these issues should subside, if not completely, then by at least a larger proportion. Talking about the challenges inherent in the fintech domain, Mr. Hassan, what do you think are some of the challenges faced by startups operating in this particular sector?
Yeah, just to sort of wrap up and maybe summarize some of the points I raised earlier. I think that there's sort of three key areas that a startup needs to think about carefully. Right, one is identify the real market opportunity that matches your business. What is the most conducive business environment? Which one is most likely to provide you with revenue early, and where you can manage your costs appropriately? Secondly, where and how you can access funding. Is that clear to you? How do you build that into your growth plans? And then three, how do you access the talent pool that you need? I think that those are sort of the three key areas that startups find daunting when they're putting their business plan together. But some thoughts around that, I think, would be helpful for them.
Addressing these issues will be very imperative when it comes to the entire ecosystem, and it actually holds a key relevance to the future of fintech as well. Ms. Lowe and Mr. Hassan, both of you, what policy suggestions do you propose that will provide the required impetus and help mitigate all these issues that we have highlighted here?
Yeah, just to again wrap up. I covered the ways in which we've tried to address those challenges in Dubai and the DIFC. I think you have to be, as a government organisation or an association or a ecosystem provider, you need to be proactive on the front foot. Looking to plug those gaps and connect startups and assist startups in the ways that I covered previously.
Yeah, I think I also just have a quick wrap up. I think for the fintech and digital ecosystem, if we can really do something that would be try to do more POCs and experimentation before really go to the markets, because the market phase is quite important, but the market phase also relate to the different regulatory issues that we are exploring. So I think if we can try and have also try to co-op with the fintech or the financial institutions, so more experimentation would be better.
As you said, more experimentation, more innovation. There's a promising scope for fintech in the future, and I would now request the host to take over.
Thank you. Thank you, Pallavi. Thank you, Shan, and thank you, Mr. Hassan, for sharing your insights. So this brings us to the end of this panel discussion, quite an enriching one, where Mr. Hassan shared his perspective and Shan shared her perspective. I'm sure the audience and the participants must have had a good experience of learning more about the fintech hubs from different countries' perspective. On that note, I would like to thank all our sponsors and partners, Razorpay, Amazon Pay, WhatsApp, in association with Google Pay, Open Financial Technologies, and cash-free payments. Thank you, ladies and gentlemen. Have a wonderful day.
Thank you.
Thank you.
Thank you. Thank you.
Thank you. Bye bye.